Hi, good afternoon. Today is Tuesday, December the 20th, and overnight we can see, the time right now is just past midday at 12:27 in Singapore. And overnight, on Wall Street, we can see that US equity continue to slide, and since the market peaks out at about 34,712 last Tuesday, we can see that the market has been coming down. And as far as the Dow Jones is concerned, it has lost more than 2,000 points in just less than a week. Today is exactly Tuesday, so the peak was last Tuesday. So we can see about a week's time you lost 2,000 points, and this is pretty sharp on a relative basis. So we have to come around to the idea that perhaps maybe the US equity rebound from mid-October may have already peaked at 34,712 in the Dow Jones, and going forward we are maybe looking at lower prices as we go towards Christmas, okay, and maybe even towards the year end. And last night low at 32,581 may elicit maybe a small rebound going into tonight's trading. So if there's going to be a decent rebound, I'm more than happy to re-establish my short position. I've actually exited my short position in S&P 500, netting something like $5,000 last night. It was a pretty good night for me, and that was only for a week of holding that position. So going forward, I do expect the prices of US equities to continue to slide back towards the year end. So we will have to watch this move here, because there's a potential that the market has already peaked, and if that's the case, then we are looking at the resumption of the bear market from the beginning of this year. So in the S&P 500, we can see that the last night high, last night low at 3,800 was exactly where I put my order to get out, and I managed to buy back my position almost near the day low. So that was a bonus, but it is not necessarily something that can happen every single day. I just got lucky because the market got to my price, and shortly thereafter it bottoms out and hence staged a minor recovery. But by and large, you can see that this market high at 4,100 was also peaking, also peaked last Tuesday, right after the CPI numbers was released, and right after the day after we had the FOMC meeting, and the market come back down, never quite look back, although it did miss my target by just 18 points. My original target for this market to rally was 4,118, but it came out to 4,100, and then just couldn't go that little bit more, and then the market came back down. And then more importantly, on a technical basis, it took out a minor I would consider a medium-term support line, and you can see it took out this line very cleanly. Okay, before it took out this line, you can see that there were several attempts in which it was hugging this line. Obviously, the market was observing this support line, but once it's taken out, you can see there was no looking back, and the market continues to slide for 5-6 trading days in a row. So now the low is 3,800. I do expect a little bit of rebound going to tonight's trading. Hopefully it can go back to 38 to the 3,900 levels, and then I will look for levels to see if the market give me a clue that it has already lost its momentum and getting ready to resume its slide. So if that's the case, I am more than happy to re-establish my short back maybe around 3,915 levels, okay, or 18 levels. So this leg here, I think there is a potential in market try to rebound to this level. We will have to watch if the market give us a chance to get back in again. In the Nasdaq 100, we can see that the rebound, even as the market was rebounding from mid-October, it did not go out by the same magnitude as the Dow Jones or even the S&P 500. It basically picks out at 12,166 last Tuesday, and then it took out the same thing like the S&P 500. It took out a medium-term support line and never quite looked back. Market went down all the way to 11,029.77, and now we are very, very close to the November low, which is in turn very, very close to the year's low. So if this decline in the Nasdaq 100, which is the weakest link among all the three major equity index that we are seeing so far, if the market continues to decline without a decent rebound, and take out the November low and subsequently take out the year low, we could be potentially looking at this market here ending the year at the year's low. So that will be setting the stage for even further losses going to 2023, at least in the first quarter of next year. So everything does looks a little bit less than optimal. We're likely to see more losses in US equity markets. And then when we look at Asia this morning, we have a bit of a reaction in the Hang Seng. Yesterday, the Hang Seng did not quite react, but this morning it does react. And at midday, it was at 19,018, and it still has not taken up this medium-term support line. And if it does, maybe what we'll be seeing is very similar to what we saw in the S&P 500 and the Nasdaq 100. If the market takes out this medium-term support, it may be looking at lower prices. So far, it is a three-wave rebound, which is technically a corrective wave. And you can see the larger box here is pink color, meaning to say that the dominant trend is bearish, and we are seeing this rebound from 14,597 is basically seen as a technical rebound, which has unfolded in a three-wave pattern, and actually also missed my target by a mere 13 points in the Hang Seng. My target was 19,939. The market went up to a high at 19,926 and then struggled and then didn't quite make it. So we will have to see development if losses on Wall Street continues, and it's almost inevitable we will see this Hang Seng market take out the support line. Over in the Shanghai Composite Index, which is a mainland stock, we can see that as of last Friday, we can see the market has decisively taken out, this is actually Monday. The market has decisively taken out this support line, and you can see that it was quite clean, and the market never quite attempt to rebound. So currently the market is at 3,080 as of midday. We may continue to see possibly lower prices. The near-term support appears to be at 3,035 thereabout. If this level cannot hold, I think the market is going to go down to at least attempt to challenge the October low, which is also the year low at 2,885. Okay. Nikkei has a massive sell-off this morning. I think they are reacting in tandem to the losses on Wall Street. You can see the market peaks in November, not this month, last month at 28,502, and they have taken out the support line very cleanly. Okay, before the market take out this line, the market was hugging this line very closely, and the first attempt to take out this line elicit a successful rebound back into the support line. Okay, but then again it lost it one more time, and then this time it never quite come back. So right now the market is already in my target zone. My target is about 26,486. Now market low so far this morning at midday is at, let me see, it's at 28,418. So it's already within my target. So at least in the near term, try not to sell this thing at this current price. Wait for a decent rebound. If the rebound happens, well and good. If it doesn't rebound, selling at this price is definitely less than ideal. Okay. Okay, then let's look at it. Let's look at currencies. This morning we have a massive sell-off in dollar yen, which is actually the exact opposite of what I was expecting. I was expecting dollar yen to continue to chart higher, to maybe challenge the November high at 142.25. But this morning we have a massive sell down in dollar yen. Today we have the Bank of Japan decision. Okay, we have to it is a day in which the Bank of Japan is supposed to decide if they're going to do anything on the interest rate front, which expectedly they did nothing, which they have been maintaining throughout the whole year, keeping interest rate at negative 0.1. So there was no surprise there, but there were rumors that the current BOJ president is going to rotate out. His term is going to end, and he's not going to seek re-election. So there is this rumors swirling around in the FX market saying the incoming governor of the Bank of Japan may actually have a different take. Maybe he wants to be in line with the other G7 central banks by hiking interest rate. You can see the current governor of the BOJ has been keeping a very tight lid on interest rates, doesn't allow it to rise beyond 0.25%. So we can see that he has been basically keeping a lead on interest rates. It's just basically rumor, because we don't even know who is going to be the incoming new governor of BOJ and that will only happen next year. So we will have to see who is coming in, and if this person is known, and what are his views on interest rates. So right now it's just pure rumor, but the market has really reacted. So in the absence of any fundamental, which is we cannot base this on rumor, we are look at the price action itself. So as far as the price is concerned, it has taken out the the December low. Now it has went up to 133.10. So will there be further losses going forward? We will have to refer to the chart point. Let me refer you to the daily time frame, okay, to get some kind of perspective. Now this market has been in a bull run from very far back. Okay, we can see that the market actually have a bull run all the way back from March of 2020, which is at the start of the pandemic. So this is more than 2 years old. Okay, this bull has been more than 2 years old, having a peak at near 152. Okay, so it all begins with intervention, and then now the market has turned into a torrent. And if this market continues down and take out the August low at 130.39, that means this entire bull run is over. Okay, then we'll be looking at a new pattern altogether. And if that's the case, then we cannot continue to buy dollar yet, at least not dollar yet. Okay, but over the long term, the dollar is still going to be the dominant currencies. So I do not see how this pullback here can change the structure. Okay, unless there is some major policy change from the Bank of Japan. We have to watch. Okay, so far there is nothing concrete that we can put our fingers on. As far as the other currency is concerned, I have been keeping a slightly bearish view on the other majors, thinking that the dollar is going to come back up again. Now the high in sterling this round is 124.47, and it's very, very close to the May high of 127.67. So from here onwards, like I said, this is a very low risk trade. On the short side, I have been attempting to short, but I have not been successful so far. So in this afternoon, if we can manage a rebound at 121 or 122 levels, I think that will be a good level to attempt to short. But I'm not looking, I'm not particularly insisting that I need to do this trade, because I already got another trade in euro dollar. So I think that will be more than compensate for my inability to get into position in sterling. So, but if the market can go back to 122, I think that's a great level to actually position a short for my target is a 119. Okay, 119 is my immediate target, and that means the market have to take out the December low for now. Okay, let's go back to the 4 hours time frame. We can see clearly this is exactly what I'm talking about. The market actually come back here this morning at 122.24. I did not place an order. I only see this when I update my chart just before this presentation. So that means I have missed my chance to actually position for a short. It would have been a wonderful selling position at 122, but that's water under the bridge now. So if the market continue to decay all the way to below 120.48 towards 119, I think that will be my target. So you can see that there is a little bit of mid left, but in terms of where I need to put my stop at 124.47, it doesn't make sense anymore, because it's no longer 1:1. Even at 1:1, I would not even do the trade, because the risk reward is equal. So from a risk reward potential, this is not a great setup, although there is still some meat there on the downside. Conversely, on the euro dollar, I wish I already gone short yesterday. Actually, I placed 2 orders to sell. Only one got filled, the other one is still pending. So the high traded at 107.36 this round, and the market has taken out a support line, but you can see that this support line is not really that strong, because the market has visited this level many times. Maybe I'm going to shift it a little bit. Okay, maybe to here. So if this is the case, maybe it does look a little bit better. So anyway, the market actually rebounded this morning at 106.37 to 106.56, which is just a very small band of prices because dollar yen have come off, so the other currency will have to rebound. And if the market take out this low here, the so far the month low at 103.93, I think the market is going to go for 102.22, which is now my target. Okay, so I have already sold. I want to see how the market reacts at the December low so far at 103.93, and if this level is taken up cleanly, then I think my odds of prices coming to hit my target at 102.22 is pretty good, and I'm going to take my profit just above this line here. Okay, just above the target of 102.22. Maybe I'll take my profit at 102, maybe 30 or 35. Okay, so I'll be more than here. I'm more than happy to do that. Over in the Aussie, we can see the Aussie market is coming down and it has taken out the December low. So this is a harbinger of what prices could do for the other currencies. You can see that from a high of this morning, 0.6744, you take out the December low, which is so far traded in on December the 7th at 06669, and it has taken out this line here very cleanly, and it's obviously gunning for 0.6585, which is my target if I have a position. But at this current price, it's no longer beneficial to go short, because at the nearest I put my stop here as 0.6744. It still does not make sense, because the risk reward is not ideal, because it's less than 1:1. Okay, meaning to say that a dollar risk can only give me at best a dollar reward. So this is not a good setup. In euro, dollar versus Canadian, I also have a bullish view. I think the market currently is at 1.3676. This morning low at 136.415 was the low so far, and I think the upside potential is at 138. But again, if I could do this trade, it's slightly better than the other currency pair other than euro dollar. Okay, if I do this trade, I'll put my stop below 135.15 and go for 138. But it is not that great a risk reward ratio. The one that is giving me the best risk reward ratio, I'm going to show you one more time, which is the euro versus the dollar. Current price is 106. In the market can take out this level, I'm gunning for 102 at least 35, and the risk reward here is up to 130, 107.40, 45 thereabout. So if I take this in terms of my total risk profile, I have 1, 2, 3, 1:3 setup here. So I think the euro versus the dollar is definitely a superior risk reward ratio compared to the other currency pair for now. Okay, so let's go on and look at crude oil. Crude oil yesterday have managed to recover from $73.40, and there was a piece of news saying that there was a earthquake in Texas in the oil producing region. We do not know what damage, if any. So if there's going to be any news update saying that, okay, there are some oil producing facility has been damaged because of the earthquake, then this is definitely going to cause price to spike up. For the time being, I think I'm going to lower down my expectation. My earlier expectation was for crude oil to rally all the way to $93.74, but I think now I have lowered it down dramatically to just under, maybe just over $83. If the price can go up to $83, I'm more than happy to take profit. In fact, yesterday I actually bought some more near the bottom here, and I've already have long position going into this trade. In fact, I've been holding on to this position for far too long. Okay, I've been nursing unrealized losses all the way up to $70.08, and now that the market is looking to recover, if the market can take out the near-term resistance line and then this thing unfolds as a three-wave, then this will be my target area. Okay, then as the market goes into this price range, I'll be more than happy to take my profit and call it a day, and maybe call it for the year. Okay, so this could be the last major trade for the year if the price goes up to anywhere near my target price of $83 per barrel. Okay, over in gold, I have some working orders. I'm hoping to sell gold right now near the $1,800 level. I hope that this rebound actually extend a bit higher beyond yesterday's highs of 1,798. And if this is the case, I think we will get a slightly higher entry price, ideally around the $1,800. And for a gold at 1,725. Okay, so because this, I think over the long term, you can see that this market is a very bullish setup. So I would love to hold long-term position long, okay, rather than hold short. So this short is actually a short-term punt, hoping that the market will actually drift all the way to 1,725 for me to position a long-term long position for gold. Okay, so this is something that I am looking forward to. But the one that really excites me is actually silver. Silver is by far even more bullish than gold prices. So the way I look at it, if there's going to be a pullback in silver prices, ideally around the $22, by the time market hit the $22, I'll be more than happy to start looking for reversal sign. If this market extend lower below the $22 to $21, even 40 cents, I will still be very keen to buy. Okay, so I have been trying to buy silver for quite some time without much success. I've only managed to get in one, but I didn't sit tight. Okay, for some reason I got up. And this time, if the market can come to this kind of level, I not only want to take up a long position, I'm going to go and buy the actual bullion, the actual silver, because I think the potential for silver to massively go up is going to be coming next year. Okay, so this is just my personal opinion. This is what I think I would do. As the price comes down to near $22, I will go in to the shop and buy a physical. I'll be looking to buy silver coins, whether it's Panda, Maple Leaf, American Gold Eagle. So I'm going to buy those coins to keep. Okay. Over in crypto itself, you can see the crypto market has actually pulled back last night to 16,283 in the Bitcoin from a high of 18,375. And we can see that this market just do not have enough motivation, does not have enough factor to actually push price higher. I think if we look at this from a higher perspective, from a larger point of view, is that ever since the Federal Reserve started to hike interest rate as early as March this year, cryptocurrency has been falling. So you can actually deduce the idea that perhaps only when the Federal Reserve stop raising interest rates and start to cut interest rates and actually launch what we call a quantitative easing all over again, which is totally not impossible, only under that condition when we have cheap capital, when interest rate is cheap, okay, can speculators actually borrow to come back into this market. So maybe it will be tied to the next time the Federal Reserve actually launch another QE. And that can happen if the US economy slips into a severe recession. And I think the Federal Reserve will abandon the fight against inflation and focus on fighting recession then. Okay, so as we go into 2023, the theme will rotate from inflation to recession. Okay, so if the recession comes in and it's becoming very severe, I think the Federal Reserve will throw in a towel, say, never mind, let's forget about inflation for timing, let's tackle the recession. And that means lower interest rates. Then maybe we can get something going in the cryptocurrency space. Now, for Ethereum, we also saw a decay down to 1,151 from a high of 1,351. So there's a loss of $200 in just a week time. So you can see the prices has stabilized. So what? Somewhat, but by and large, you can see that there is still really nothing to cause the market to be excited to push the price higher. In my opinion, I think there's going to be one last flush down to take out all the weak hands who have been buying cryptos. Okay, Ripple is a victim of the lack of new information as to how the case between the SEC and Ripple Lab is going. This case has been dragging on for far too long, and the market is getting a little bit basically getting tired because there is simply no news as to are they going to sue them, are they going to what they're going to fine them or what, because I think the SEC is contesting the idea that their tokens issued in the United States to US investors should be regarded as a security, whereas Ripple Lab said that it is not. Okay, so they are contesting this definition of Ripple, okay, the token. So until there is a resolution to the outcome, I think this market will simply be just hanging around looking for direction. Okay, so there's no real motivation here. Now, Binance Coin, of course, is a victim of a bad press. Ever since the implosion of FTX, we can see that the focus has been going to find another culprit to blame this thing, because a lot of people has been saying that the reason why FTX collapsed the way it did was because Binance actually unload their tokens, which is the FTT, into the market, and that caused a sell-off in the FTT token owned by FTX, and that caused the demise of FTX. So now they are looking for blood, and the US Department of Justice has actually launched an investigation into Binance, alleging that they has been doing money laundering. So that has become a negative cloud hanging over the Binance Coin. Binance Coin was actually doing fairly well until this case came into being. So it has sold off to $220, and now it has a bit of a rebound. But like I say, until this case is somehow removed, it will be operating under a cloud of uncertainty. Okay, Dogecoin, which is a meme coin, has no intrinsic value. The market is basically drifting. This morning it went up to 0.07, which took out the November low of 0.009. Okay, so this is a market that is just except for Elon Musk, nobody is looking at this coin because of Elon Musk's very high profile promoting of this particular token. He has taken on a life of his own. But by and large, this token has no utility whatsoever. It's basically a fun coin. Okay, it was supposed to be used, launched to create a joke. Okay, so this coin maybe it will go into oblivion for all we know. The Cardano, because it's closely tied to Ethereum, is suffering from, again, bad price. We can see that the price continues to drift lower. This is the lowest so far at 0.249 this morning, and it doesn't look like it's going to go anywhere except down. Okay. Solana on percentage term has actually seen a more robust rebound, okay, in terms of the top 10 stable coin. I think it is one of the best performing this round, okay, having appreciated from just under $11 to just under $15. So in terms of percentage term, this is actually quite a good rally here, but the market has since come back to $11.68 this morning. And if this is the case, if we can stabilize at current level, maybe the top side is about $15 to $16. So that's the best we can expect. So until tomorrow, I'll see you again. In the meantime, take care and stay safe. Bye-bye.